Okay, well, okay, good turnout today. Appreciate everybody coming out. My name is Josh. I'm part of the LEAD committee. LEAD is a group that the chamber had put together, and the purpose behind it is just to kind of open-handedly help out the small business community of Gillette and Campbell County. And so every other month we put on these events in the mornings and have some breakfast, have a local expert come around and speak on a different topic that is pertinent to business and business owners. So spread the word and tell everybody about it. We're also starting a new plan to this morning. We're going to start recording our presenters as they're given their information, and then putting together a library. We found that over the last 2 years of probably doing this, there's been a lot of really good content, and maybe schedules just don't quite work out or something. So we wanted to get a library put together as another resource for small businesses out there. So, and then also have some contact information for who the presenters were and such. And then the other thing too is if you have a topic that you'd like to talk about, come talk to one of us that's either on the chamber or on the committee, and we'd love to have you on the topic that can help out the businesses and go out here. So without further ado, this is Tom Jasiak, Casey Peterson Associates. I'm going to give your own background.
Thank you, Josh.
Okay.
Well, I'm Tom Jasiak. I'm a CPA with Casey Peterson. I've been practicing for about 15 years. I specialize in tax, financial planning for individuals, small businesses, trust and estate. And I guess I'll be a little cocky. At this point, if you're working with me or Casey Peterson or somebody like us, you're probably doing something right. So thank you. So you got the accountant memo. So this is how the accountant puts together a presentation so we don't screw up like a PowerPoint. I'd appreciate if you don't publish this. A lot of this came off the press yesterday, right before swimming lessons. But following my first pages of notes, there's some good information for planning and year end. So let's kind of go through this to begin with, and then we'll get started. So the first 5 pages are my standard, or some of my standard procedure with new clients and what we go over. In the bottom right hand, you can see little numbers. Page 6 is fun. In preparing for this, I reviewed what was going on in Congress. So you can go to Congress and see what bills are being talked about. And as of November 14th, this is the most looked at bills. Number 5 on that list has kind of a snappy title you might want to reference. Gail got it. Number 7, page 7, the Build Back Better Act. That's the big tax legislation that's getting batted around now. We will address that. We're going to address that in generalities, but page 7 is an article from yesterday where that's at. So nothing solid there, but we'll talk about it a little bit. Page 10 has some good planning. So these planning letters came from our software, from Thomson Reuters RII Checkpoint. So if somebody has a question, a good place for me to go is go and get a client letter. So it presents the information well. There's one for individuals. There's one for business for year-end planning. These letters really aren't taking into account any changes with the Build Back Better Act. So these are effective as of today, assuming Congress doesn't do anything. We can talk about that here in a little bit too. Then Monday, President Biden signed the infrastructure bill. So there's some tax considerations there. There's a tax summary in here for that infrastructure bill. A couple things we'll talk about there. And then page 24 is the employee retention credit. That's huge. We'll talk about that a little bit. If you are a business owner and you had payroll over the last 2 years, and you haven't looked at the employee retention credit, be sure to talk to me before you leave, because it's been massive for some clients. So also, we won't get through all this information. There's just a lot with tax law. So I'll kind of give a brief overview. We'll go through it. And then if anybody has questions, please pipe up. Came out, this is for you. So let me know. So let's go back to page 1. My standard dog and pony show. One question we like to ask business owners is, why are you in business? What are you doing? If you're passionate about a product or service, or do you just want to make money, or you're not happy with your boss? Do a deep dive into that. Many business owners don't know what they're getting into. I talked to Josh recently about this. When he starts talking with his clients, he transitions right into the next section of succession planning. What's your end game? So you're getting into business. What's your end game? It puts a whole different perspective on why people are in business. And another thing too, if you can think about, your personal life too, if you're thinking about going into business or you're batting around why you should be in business, your own personal life, you can operate it like a business. You take care of your finances, you're selling your time to your employers, you're marketing yourself. It's really a good place to start analyzing when you want to go into business. Succession planning. Next page, page 2. This is so important, and a lot of times it doesn't get addressed until people are ready to retire. There's an event, something happens, and we have to, how do we transition to business? What's the plan to transition to business? We'll skip down a little bit, but everybody thinks their business is worth more than it is. It's just emotional. They built this up. They've put their heart and soul into it. And when it comes down, we start talking, we get evaluation. It's quite emotional when they find out it's really not, it might not be worth as what they think it is. So setting their expectations and planning in advance can really maximize sales price and avoid a disaster when it's time to transition. Along these lines, when you're analyzing your business, one good thing to look at are the 5 Ds. So consider the what ifs pertaining to these 5 Ds: death, disability, divorce, disagreement, or distress. There are documents you can work with your accountants, your lawyers. The lawyer will draft them, but working with the other financial professionals to draft these documents important. Buy-sell agreements, life insurance to fund some of these events, all very important. And hit. Yes, ma'am.
So is this different, if you plan on passing your business on to a child?
That's a great question. That's one of the first questions. I'd like my children to take over this business. I'd come back with you. Are they passionate about it? Can they do this? Do the children, is this what they want to do, or is this what you want to do for them? So yes, that would be one of the great things. Employees taking over a business can be another option. We're working through that in a firm where the employees are buying into the business and we're trying to structure how they can do that. So really the key point for this would be, think about the 5 Ds. That will avoid some events. Talk to your lawyer, talk to your accountant. You can ask me questions and plan in advance. If it comes down to, if you're trying to sell your business to my client and you come and we're looking at the financial statements and we're looking at the tax returns, and I see a bunch of their personal expenses, you tell me their personal expenses, but they're running through the business. Well, the business isn't as profitable. It's not cash flowing. We're going to come back and say, okay, this is what we can pay for this business because that's what a return. Does it need to have a camper running through it? I mean, that's what we're stating here. So plan in advance. That can be really important for business owners. And then you can read the rest. Next page, page 3, entity selection. Who here has heard of an S corporation? Did your barber tell you to be an S corporation? Did your uncle? Did somebody else? So S corporation, S corporation. Now, S corporation is very important, but it is a tax decision. So I get, and you want to work with your accountant, your tax professional, and perhaps your lawyer to do that, because you don't want prohibitive language in the operating agreement that'll blow up an S corp election. So I should back up a little bit. What is an S corporation? An S corporation is a federal tax election that saves on payroll taxes, Medicare and Social Security tax. So what you pay yourself in excess of what you put on a W-2 isn't subject to Medicare and Social Security tax. So say you have $200,000 as a sole proprietor and you've got employees, so single member LLC. If we make an S corp election and pay yourself $50,000 on a W-2, the 150 excess isn't subject to Medicare and Social Security tax. So it is an effective tax savings move. In general, don't jump into it. Tracy.
Do you not get the $150,000 back?
You're not paying in, so that's true. I mean, there are trade-offs there. So you're not paying into Social Security would be a big one. You're paying in for your retirement benefits, but along those lines, that's a great question. You want to make sure you're paying into Social Security, especially if you have kids. or there's disability benefits, and the survivor benefits for Social Security are fantastic. I've seen that save families where there's not life insurance in place, there's not this, but they've been working. So there's $10,000, $15,000 a year in Social Security benefits being paid out to these kids. So great question. No, you're not paying into that. We don't really track what you pay into Medicare. You just want to pay into it. But the Social Security is something that we track for overall financial health of an individual. And outside of the retirement, one thing to take away is the survivor's benefits. With kids, pay in if you can. And it doesn't take much to pay in. So great question. So I get all excited with the entity selection. I probably should back up. So some of these are what entities are. You set up the entity with the state of Wyoming or any state. So you can set up like an LLC. You've heard of a limited liability company. Wyoming's the birthplace of the LLC. Or you can set up a corporation with the state of Wyoming. That provides liability protection for yourself. So this is, you work with your attorney on this, but the idea is if you have the LLC, you run it separately from your personal stuff. If there's a lawsuit, they sue the LLC, they sue the assets, they don't get to the personal assets. So making sure you don't pierce the corporate veil, keeping business and personal assets separate is very important. That goes right back to succession planning too. If you're keeping stuff separate and we are analyzing financial statements for a sale, well, it's cleaner, it looks better. That's gonna say, the accountant, the bankers, the planners, we're gonna look at this and say, all right, first of all, the financial statements look good. There's a check that you're doing something right. So, and then going full circle, when we set the LLC or the corporation up with the state, we can then make an S corp election. So we set the LLC up with the state, you get an employer identification number, get a bank account, make sure all the legal documents are in place. And then we just analyze it. We analyze the business and say, okay, should we make an S corp election? We can do that late too. We can file a tax return pursuant to Rev Proc 2013-30 and do that late. So this time of year, if we miss planning in February and March with some of my clients and we're saying, you know what, we should have been an S corporation in 2021, we can do that now. We pay the owner some reasonable compensation and we file the tax return pursuant to that. Rev Proc 2013-30. It's a good move. Don't jump into it though. The other thing, keep appreciating property out of a corporation. Don't put land into a corporation because it comes out at fair market value. They did that. A bunch of ranchers and accountants and attorneys got burned in South Dakota doing that. They were doing what was right. Then they changed the law. So now we have all this land locked in corporations. It's hard to undo. It can be a big taxable event to get it out. So appreciating property, not a corporation. This one, I won't spend too much time on it, but accounting and procedural considerations, getting everything set up initially correct is very important. So payroll, talk to a professional, get that set up correct. It's a minefield if it's for fixing mistakes later. Pay the payroll taxes on time. Sales tax, nothing makes me shiver more than a sales tax problem. What if you're not paying sales tax on a product for years and years and years? Then you get an audit and you go back. That can just break a business, or, and if we have great people at the Department of Revenue. Call Garrett up right here and say, Garrett, help me with this. It does this. And if you get correspondence from them, they'll put it right in an email, put it in the file. You can hang your hat on that. And they've said that. Even if they're wrong, you can hang your hat on that. But let's make sure we get it right. If they are wrong, you think they're wrong, question it. Let's get that right. That one is scary. Accounting software, know what you're doing, take a good, the better you do, tax prep fees are getting expensive. If you get a good CPA that's going to do your tax prep fees, it's like you're paying $500 to $1,000 on a tax return and maybe not getting any feedback. I mean, truly, it is a problem, and I know it is. But the more organized you are, you want them to get it into the tax program, jump through all the hoops. Then you want the planning. What's going on? What can I do better? The more organized you can get information to them, the more organized, the more you'll save, the more you'll get back. Internal controls. That one is huge. Prevent fraud, prevent people stealing from you before it starts. So separate your duties. The person opening the mail and making the deposits shouldn't be doing the bookkeeping. The bookkeeper should not have signing authority to that. Oh, Freddie, my bookkeeper, just does everything. He signs everything. Well, many times we're reading about Freddie years later when they've cleaned them dry in the paper. My partner is a fraud examiner. We have seen so much of this. It's just terrible. Do your employees a favor and just separate the duties. Don't even give them the opportunity to steal. Yep, Lori, please. Oh, it's huge.
If you have a very small company, what is the best way to avoid it? If you do have just one person opening the mail and doing everything, what is one thing an employer can do or an owner can do?
It's a great question. You know, at the Boys and Girls Club, we get that too. That was a good, how do we separate controls? The owner being the only one that can sign and really control the checking account's a big one, and reviewing the checking account. The owner can go through and just say, what's this transaction? What's this transaction? If the cards are handed out, credit cards are handed out to employees, you know, question, keep them on their toes. If they know that they're going to be questioned for their transactions, that can help. So good question. I had one client that just started asking for receipts. So, you know, I'm the accountant, we should all have receipts, but he's like, he started asking for receipts. Well, the gas card was really decreased, how much was put on the gas card. So it worked. Let me see. So current tax and policy considerations. This employee retention credit is huge. If you paid employees from 2020 to 2021 and revenue decreased, it had to decrease 50% from the comparative quarter in 2020 to 2019 and 20% in 2021 compared to 2019, you may qualify for this credit. There's a bunch of stipulations. It's not worth getting into it, but I'm gonna stick around after this. If you think it qualifies, come grab me and let's talk it through, because this has been tens of hundreds of thousands of dollars that has been recouped. And work with somebody reputable. There's advertising percentage. So some places are advertising, we'll take a percentage of your credit. So we'll calculate the credit, but we're gonna take 15% of it. We're not doing that. Not to say we're, you know, not charging a bit for this, because there's a lot of upfront time that we had to go into this, but question how you're going to get charged for that when you do get this calculation done. There are differences, but they both qualify. A nonprofit will qualify for that. So good question. The Build Back Better Act. It's still a bill. It's not a law. I think on page 7, there's an article about where that's at. They're still batting it back and forth in the chambers of commerce and at the White House where they're going to end. It's likely that's going to have some sweeping tax law changes. Its tax rates are going up. It's for the higher income individuals. So roughly $400,000 for a married couple. So in this town, it'll hit quite a few people. We've seen that a lot. Like when the Tax Cuts and Job Act came out in 17, we have so many contractors that are about $400,000 to $600,000 of net income, and they were saving, you know, $40,000 to $50,000. It was great. They can pay down debt. They can save if they're responsible business owners. I mean, it was just profits. They can distribute it back out to their employees. But it does look like tax rates are going up. I hope so. We've talked about it, Gail. They could. There's some stuff they could go retroactively. That'd just be devastating. And I mean, I'm not the academic. I read that, but I do know when I've read from the academics, they could do it retroactively. I sure hope they do it prospectively. One of them would be the estate exemption too. I mean, how much net worth you can pass away with and not pay taxes and pass it on. That's another big one for us locally because we have a lot of ranchers. They're land rich, cash poor. So we've got $15 million ranch. We owe this taxes and we have nothing to pay for it. There are some discounts available for that, but that's one to watch. We've been working a lot this past year, just making sure we don't get too surprised by that. Here's a good one though. And Josh, I know Josh likes new stuff that's coming out, new planning opportunity. This is one I want to talk to everybody about. And Ryan, C Corp rates. This new bill might stagger the C Corp rates. So C corporations for the first $400,000 could be taxed at, going off memory, but it's either 15 to 18%. That means if you set up a C corporation, you can run a lot more owner benefits through it, and you can pay down debt at a lower rate than you would in an S corp. And then you can make an S corporation later and start running the clock out for the built-in gains tax. So starting, if you've got a good plan and you're organized, like if you got some faith in who's running this operation, it's going to be profitable. Starting out as a C corp to pay down debt at a lower rate could be a great move. Another one is the Sensible Taxation and Equity Promotion Act. That one, it's not getting a lot of traction, but there's interesting stuff in there. We won't get too much into that. Just know it's out there. It was proposed. The Infrastructure and Investment Act, that was signed by President Biden Monday. That one has some tax considerations. One, employee retention credit. The wages after September 30th no longer qualify for that. That's the big one. There's now reporting requirements for cryptocurrency brokerages. They now have to report that. That wasn't the case last year. That'll help with tax prep. That was kind of a you'd have to buy a separate software to talk with whatever brokerage account you were using many times. And then this is a good one. This was taken from Keebler Tax Wealth and Education Training Material, just word for word. It was, what is the Democratic Party's policy themes? Well, higher additional payroll taxes on higher earners. A lot of our physicians, over 400,000, they're going to get additional payroll taxes. Increase the marginal rate on the higher earners. Increase capital gains rate. That's another one. So if we're going to have sales, like some of this, they're talking about increasing capital gains rates on sales over $1 million. That's a ranch sale. So that's our people. That's, that can change how we structure. Do we have installment method sales or something like that? So we really have to watch these capital gains rates and control those. That'll be a big one. Another idea, taxing wealth instead of like an income tax, like taxing like a balance sheet tax, like we just have something sitting. That's a consideration. That's the valuation. People will probably like that because you have to place a value on closely held businesses now. So how do we get to that value? Dorky tax guys like me are going to love to watch everybody sort this out, and then and then increase the corporate rate. That one I think is misleading. I still think with small business, there's some opportunity there to start structuring things as C corporations. And that's really my dog and pony show. Does anybody have questions? Is there anything else? That's my 20 minutes. There are any questions? Is there anything anyone wants to talk about? Did anybody come here with an agenda and they want to discuss? Lori.
I have a question. So if somebody is an LLC, is it important for them to say their business, blah, 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 LLC? How important is that designation?
That's a good question. I'd be speculating. It'd be a legal consideration. Do you have to advertise your business as LLC? I think you do, but talk to your lawyer. I'm not going to go on record and say, hey, yeah, you're right though. I think you do. If you're going to do it, if it's Lori's Luxury Items LLC, advertise it as Lori's Luxury Items LLC.
So my real question.
Yes.
When I do the home show, and I list the people, how important is it to put ink in the booths, to put ink for LLC? Those designations, that meant nothing to me before today.
Good question.
How important is that? Because we struggle with it.
Well, if it were me, I would, however they present it to me is how I would advertise it for them. But that'd be a fun lawsuit to be sitting watching in case if that's what pierces the corporate veil right there. I would present. It's a good question. For me, it just goes back to a legal question. Are we sitting in a courtroom getting subpoenaed and just talking about what's piercing the corporate veil? That's the main thing I think about when I think about LLCs, because for tax purposes, it doesn't matter in general. So yeah, I think you're right though. That is part of the title if they present it as that. But from your point of view, I would just present it as they give it to you and question it. Questioning whether or not this is right is always good service. So.
Is there a minimum number of employees?
Good question. There's
Single person.
No, but you can. So if you're a single member LLC, we don't have to file a separate tax return. So it's a Schedule C, Schedule F, Schedule E on your personal return. If we make an S corp election, we have to file a separate tax return. But to answer your question, there are requirements with an S corp if you can be an S corp. So the owners of an S corp, the ones that receive a K1, the ones that own the stock or membership interest in that, you can only have 100 of those. There can only be 100 in general. Trusts in general can't own the interest, but you can make an electing small business trust in another one. That's a big one. If somebody passes away and their stock goes into a trust, make sure you're paying attention. Whoever's dealing with it knows what they're doing. But in general, it's 100 shareholders and they have to be US citizens. So one thing, like we don't see it a lot here, but in bordering companies, like you see stock going to kids and then the kids marrying like a Canadian. And now we've just blown up the S corp election because the stock is transferred and, Davey's wife is Canadian and she now owns stock or something. So that's a good one. With the S corp too, look at your operating agreement. Like distributions need to be in proportion to ownership. If the lawyer sets up the operating agreement for a partnership and there's wording in there that is prohibitive for the S corp, then just be cognizant of that. I mean, understand what your operating agreement says. That's just good practice. Yeah, that's a good question. At this point, the professional fees to file an S corporation just wouldn't make sense. We'd just pay the Medicare and Social Security tax on the 50,000. But if it's 250,000, yeah, you could save a lot of Medicare and Social Security tax on perhaps 200,000 of earnings that we don't put on a W-2.
Is the S corporation, I mean, if you're LLC, that's your operating agreement is your LLC.
Mhm.
Is that S corporation is a tax filing or classification that you go into your operating agreement that comes to line that? So not an LLC, whole entire LLC, I'm just filing out schedules.
Mhm.
But we get to that point, you say, S corp makes sense. You have to keep your operating agreement. Or that's just a classification for that tax year.
It's a classification for the tax year. When you get to that point, you're like, we should look at making an S corporation election. We want to look at the operating agreement too. So you want to look at the operating agreement and make sure nothing in it suggests different classes of stock. So that would be the big thing. Like if we have like a C corporation, you can have preferred and common stock. We don't want to say that like, okay, we own a partnership. Well, you have preferential ownership in your interest in the partnership. I have a limited interest. That might be a problem. You can have voting and non-voting shares in an S corporation, so that can some do that, but distributions have to go out. So to answer your question, look at it, and before year end, you want, if you'd make a decision to make an S corp election, review the operating agreement and make sure nothing is making different classes of stock. Yeah, you can just work with your lawyer and make sure nothing is that. And they're good at making it, effective 1/1. So if we're going to make an S corp election for 2021, it's going to be effective 1/1 of 2021. We want the operating agreement to be effective 1/1 of 2021 too. We don't want the first half of the year to conflict with what we're filing on the tax return. Tracy. Right.
But if I'm like the new girl and I just want to start my own business.
Yep.
And I don't know the difference. How would I know if I'm an LLC or an S corp or a C corp?
So if we're setting up Tracy's like performance LLC, we're going to put on just shows and everything. First thing we do is I say, well, perhaps, look into setting up an LLC, a single member LLC, get an EIN number, get a bank account, go talk to your lawyer, make sure he's good with it, he or she's good with this. And you start rolling, run all your activity through that bank account. and make sure you have your bookkeeping in order. So in December, we can look at it and say profitable, be like, wow, Tracy, you've got $250,000 of net income running through here. We should look at making an S corporation election. So if you did that for 2021, you're very profitable. You bring it to Tom. Tom says, oh, we need to do this. We turn on payroll in December, and then you save payroll taxes on $200,000. So single member LLC, starting out, single member LLC can be a great way to go. It can be very cost effective. And your best consulting dollar for paying my firm would be just have it organized, get the accounting set up correctly. And if you run it all through one bank account and only run business activity through one bank account, it's really easy to put it together later. So you could pay somebody just to go enter bank statements and you put it together later if you keep the receipts and you know where everything went. So what are you thinking of starting? What's the plan?
I want to start a food truck.
Really?
Oh.
Oh.
She wants to do that. I
Today.
And that way, if I ever have to leave town, I can.
And you'll have food with you. Cool.
You from the chamber hear a lot about people coming in and saying, hey, I want to start a business.
We typically do get people coming in and telling us, what do I do? I want to start a business. So start that. We always send them to small business administration, talk it through with Susan or PJ now. And so she can talk to you about what these.
Is PJ here? Is anybody from the Small Business Association here?
She's supposed to be her daughter.
Are you, sir? Good. How was your experience there? I've had some good experience with them. You want to? What's your? Yeah. What's your business?
My business is WM content creation, social. Create.
Cool. To my first point, what do you like about that business?
Like about it?
Yeah.
It's just fun to be able to bring value to a business. Essentially go in and help them market themselves.
Cool. I feel the same way about the tax world. Like you just want to help and like save the world with your product. That's perfect. That's a great reason to be in business.
I have a question.
Yeah.
Josh might be able to answer this too,
Mm.
but this is on a personal side.
Mhm.
So if you have a 401k set up, you're a player,
Mhm.
you're doing pre-tax dollars into this 401k. So now as a tax or a tax planner, because you know or you anticipate tax rates are going to go up, would you now be advising for people who have 401ks at pre-tax dollars to start moving those pre-tax dollars into other funds and paying that lower tax rate now than waiting to do higher?
Roth conversions. I mean, it's a timing issue. So we're at lower rates now. We think we're going to be at higher rates in the future. You can take your pre-tax dollars and do a Roth IRA conversion and turn it into a retirement vehicle called the Roth IRA or perhaps a Roth 401k. So you use after-tax dollars to fund this. It grows tax-free, and when you take it out in retirement, it comes out tax-free. It's a great tax planning move. We don't want to steal Josh's thunder for the next episode, though. We're here. It's a great point. Yeah. It's great too, because if you look at where we look at there is we look at the tax rates. So we're going from 10 to 12 to 22 to 24%. 24%, you can get up to like $400,000-$500,000 of income. So you roll a Roth IRA over and then pay taxes on that. It can be very, very lucrative. But the low hanging fruit too is if you're not working or you're unemployed and you're in that 10 to 12%, a $10,000-$20,000 Roth conversion it's great. We've been rolling $100,000 over at 10-12% all year. And it's just such a good move. Yep, and sometimes we'll separate, a lot of times we'll separate them. So if you have one, perhaps you want to separate it for whatever reason. But if you're the sole owner of both LLCs and you have profit on one and a loss on another, the two will net together for tax purposes. So it can be good planning. Agriculture, we can have, a lot of times that can run a loss and then we have a huge year and then it runs a loss. But the loss will net against income from a Schedule C. So that's good. With that stuff, you want to be careful. The main thing you want to be careful is just paying into Medicare and Social Security. Paying in $6,000, having $6,000 profit or electing to pay into Social Security is so important when you have kids. Because just paying for that survivor's benefit is, I think it's cheap insurance. Depending, from a tax perspective, it depends what your nexus or what state you're doing business in, if you owe that state tax. So there's payroll taxes, sales taxes, income taxes. In terms of what state your LLC is organized in, it's a legal question. The South Dakota LLC laws probably hold up in Wyoming. They don't, but I refer those questions to the lawyers. How much traction is what, Dale?
How much traction do you think that one bill's gonna get in our session?
The Biden one? I don't know. It's snappy, catchy name though, huh? Impeaching Joseph R. Biden, President of the United States, for abuse of power by enabling bribery and other high crimes and misdemeanors. I heard Josh.
Sensible taxation.
No. Yep.
So we just finished our banquet, so yay, that's over. You attended. Coming up, we have Thursday night on the 18th this week. We have our monthly mixer, and we'll be at Grinner's, Axe House, all dimensions, coffee beanery. Should be a good one, so if we can make it out to that one from 5 to 7 on Thursday night. Is that tomorrow? Yep. It is. Okay. And I know, I don't know the other weekend. Then starting next Monday, if you start shopping at a group of merchants that are in the little flyer that you should have in front of you, there's about 40 of them on there. If you shop at those participating businesses, you can turn in your receipts to the chamber by either dropping them off, mailing them in, or uploading them to our website. You'll be entered to win, or for a chance to win $250 in gold bucks, and we'll do that for 4 weeks. So every week, those receipts don't roll over. So you shop this week, you're in the drawing, and then we throw them away. Then you get to shop again next week. So it's a way to keep shopping in town and keep the dollars local. That's what our hope is. And the chance for you to win money that also spent locally. Let's see what else. Next month, our mixer will be at White's Frontier Motors. So if you join us for that, it'll be on the third Thursday. I'm not sure. Number 16. And then January is our next chamber chat, and I believe Josh is our presenter in January. So you'll be learning about retirement planning, wealth management. So hope you can join us for that. If you like this session, we appreciate it if you tell everybody you know. So we get more people to come. Membership directory. Okay, on the table in front of you are the brand new membership directory we just got them last week. So take a look at it, and if you like it, it's a good way to know who's a chamber member, and we do have people who own a shop with chamber members, so it's something that you can use. Just since you said that, you want to talk just a little bit about it? Sure. So we have another program that's kind of our best kept secret. It's called the member-to-member discount program. We do have about 40, 45, somewhere in there, members that participate in it. So what that means is
you shop at these members, if it's Two Guys Deco or the local or wherever, if you have our little card, you show it to them and you'll get a discount. They're offering from that business. If you don't have a card, contact us, we'll get you a card, get you as many as you need, all your employees are eligible. So you can all use them wherever you shop, and they do save money. And if you want to offer a discount, you're not currently in the program, just let us know, we'd be happy to add you to that. You can find those lists of participating members on our website as well. And Gold Bucks, buy Gold Bucks, it's that season, it's Christmas time, so if you're looking for an easy gift to give somebody, just call us and you can buy the full Gold Buck for face value, and then it only costs you a quarter extra to buy that. Thanks, everybody, for coming, and thanks, Tom.
Thank you.
Good information.
You bet. Thank you to the chamber and Josh for putting this on. This was a great service to the community.